Austin, good to see you. Today we are sharing 3 year-end tax tips. The end of the year is always a great time to start thinking about your taxes for the upcoming year. So we are sharing 3 tax saving tips that we can implement now to help get us on track for 2024. And your first tip, you say, consider maxing out your Roth IRA or consider a conversion. And we are recording this in October. Some people are calling October Rothtober.
Aaron, I love it. Rothtober, that's it. So as we know, with a Roth IRA, we have certain contribution limits and income limits that we have to consider. But if you are eligible, we know we have up until April 15th or the tax filing deadline of the next calendar year to make these contributions. So as we near year end, just double check, take a look. Am I on track to max out these accounts if we're eligible? And if not, what do I need to do to get on track? And secondly, as you mentioned, perhaps we're not eligible for a Roth contribution. So can we get money into that Roth account via a conversion? So that would simply be taking money from your traditional or rollover IRA or perhaps a 401k and converting it to your Roth IRA. And that has to be done by December 31st of the calendar year.
All right, good reminders there. Second, you say consider offsetting gains by harvesting losses. This is known as tax loss harvesting. Can you explain how it works?
Such a cool concept here in personal finance, Aaron. Essentially, what we're talking about when we mention tax loss harvesting is we're referring to accounts, first and foremost, that are taxable accounts, like a brokerage account. So what we do is essentially say we have a couple positions within that account that have gains in them. We can sell those investments and simultaneously sell some other investments that may have losses. And when we do that, we offset whatever losses we have against whatever gains we have. And this essentially reduces or perhaps eliminates our tax bill entirely on that transaction. So this is a really powerful tool that we want to be sure we're implementing before the end of the year, if indeed we qualify.
And last, you say seek tax efficient investments. What are you referring to specifically?
Yeah, so a couple of my favorites are a qualified charitable distribution. So this is essentially when we take money from an IRA and it goes directly to a qualified charity, so 501c3. And this then essentially reduces or eliminates actually the tax burden on that money. So if we're planning to give anyway, right, we don't want to give after tax dollars. We want to give and utilize this qualified charitable distribution and give pre-tax dollars. And it just makes our giving that much more efficient. Our second, actually one of my favorites, right, is the HSA. So you have to have a high deductible health plan to qualify for an HSA. But if you are eligible, this count really is a triple tax threat. So any contributions that go into this account are tax deductible in that tax year. We know that the account balance or our investments within that account grow tax-free, and we can distribute the money tax-free for a qualified withdrawal. So this is really one of those, unfortunately, underutilized accounts, but if you have access to it, please be sure that you're taking advantage of it.
Sometimes we just need that reminder. That is very helpful. So, Austin, clearly a few more advanced strategies than others. If somebody wants to talk to you about Roth conversions or any other way to maybe save on taxes this year, what's the best way to reach you?
Yes, you can send us an email at info@patriotwealthnc.com or give us a call at 919-322-4113.
All right. Austin, thank you very much.
Thanks, Aaron.